So this is the video where we talk about where to buy and where to sell. Remember I told you about this candlestick pattern when we started. This is engulfing candlestick. Engulfing. This is a bullish engulfing. So we've identified the trend to be an uptrend. Now that we know it's an uptrend, the market is bullish, what we should be looking for are buys, only buys at this point. So we go down to the lower time frame, that is 4 hours. If we want a swing trade, we go down to 4 hours. Okay, we go to where the trend actually commenced. It's very simple. There are so many ways to do this, but I want us to take this simple look of things. Looking at this box that I've drawn, you see that this is where the market actually took out structure. We had a downtrend. This is the line, this is the point where the market actually took out the last highs. So when the market took out these highs, what we are waiting for is for the market to come back into this zone, anywhere below here, for us to have a buy. Okay, the market actually came down here, but it wicked out all the way up, telling us buyers are more powerful than sellers, because in the market we have two set of people. If there is no buyer, there will be no seller, and there is no seller, then we can also have no buyer. All right, so it came down, retested this zone, because automatically this is a resistance zone. So what we have to put down right now is what we call confluences. Okay, confluences. What are confluences? These are things that are to be met for you to validate a trade or for you to take a trade. Okay, so I write them here. I write it here. I said confluences. Okay, so the first confluence we are looking for is 1, bullish engulfing. We have 2, resistance. We have 3, key, 3, key level. We have 4. I want us to have just 4 confluences. Fib level. Remember I told you about Fibonacci when we're learning how to use TradingView, right? So these are the 4 confluences we are looking at. If we have 2, it's still a good setup for us to take a trade. If we have 3, that's a good, and a perfect one is when we have 4 confluences. Okay, so we can as well add the 5th confluence to make it easy. Okay, so the 5th one is point of interest. Perfect. This is where we end with our confluences. We have point of influence or point of interest, sorry. Okay, these are our 5 confluences. I will teach you how to use the Fibonacci, but at this point we'll use the confluences we should already know. What is a resistance? A resistance is a point. So here we have resistance or support, okay, on this fourth point. Excuse me. We have support or support. Okay, so we shouldn't be looking only for resistance, because in a bullish market we are waiting for a support. So if it's a bearish market, we'll be looking for resistance. All right, so we'll use what we can easily identify. What's the point of interest? A point of interest is a point where where price has touched more than once, at least 2 to 3 times. Okay, that's a point of interest. And what is a resistance? What's a resistance or support zone? Is a support zone is where price is bouncing off. That is, maybe price breaks a zone and comes back to that zone, hits that zone, cannot break the zone, goes back up, comes to the zone the second time, hits the zone and cannot break the zone. Automatically that becomes a support zone. The second is resistance. A resistance zone is where a zone, let me be explaining it with a drawing. Like this is our chart. Okay, how do we identify support and resistance on this chart? A support and resistance can also be considered as points of interest. It's very simple. So these two confluences are actually the same thing, but you can call them anyhow you want. Perfect. And we have another one. Perfect. Good. So where is a support here? This is a support, this zone. Market has touched here once, twice, 3 and 4 times. The same here. The market has touched this resistance once, twice, and thrice. So when price touches a zone more than 2 times, automatically it becomes a point of interest. It becomes a point of interest. So this is one of the zone. This is what we are looking for. Okay, and now on this point of interest, what are we looking for? The second confluence is a bullish engulfing on this point of interest. Okay, we're looking for a bullish engulfing. As of now, we will not touch the fib level because we'll have a whole session explaining how it works. You get it? So that's why I don't want us to stress ourselves, struggling to open our brain on something which is not yet time for us to get. Okay, so we go straight to the charts to see if any of these has been made, like a bullish engulfing around a key level or a point of interest, because a key level, point of interest, and a resistance can also be considered as the same level. But there is another way of figuring out key levels. You see these round numbers, okay, round figures like 1.2400, 1.2500, 1.2600. All those points are key levels. Okay, so when you see a bullish engulfing around a key level, around a fib level, around a point of interest or a resistance or support, automatically we look for entries at that point. Okay, so you see price actually touched this zone once, twice, 3, 4. Man, guys, it touched this point so many times. You get it? So automatically we should be looking for buys around here. Okay, we should be looking for buys around here. Okay, now like I told you, the first thing we need to do is go down to our lower time frame. Like we have come down to the 4 hours. Now what are we looking for? We are looking for a bullish engulfing anywhere around here. Okay, we're looking for a bullish engulfing. Okay, this was the first time price, after price break this zone, price came back to the zone. So what do? We have to buy. Okay, we have to buy here. I will teach you sniper entries. I will teach you how to get perfect sniper entries. Okay, okay, price came here. You could buy from here because this is a bullish engulfing. Where is your stop loss? Below the last structure. Where is it? This is the last structure. Where is your stop loss? Where is your take profit? At least 2 times what you are risking. If you are risking $100, you should take at least 2 times $100 to be a take profit. Don't expect too high. Okay, so this is actually making $400 to be at $200. Simple as that. The market touched this zone and this is what happened. Okay, now this was the first 4 hours level. Okay, we got a 1:2 and price continued going up. Now we had another serious sharp retracement to this zone. Okay, automatically you realize that this is also a point of interest. As clean as that, it has retraced into this other zone, telling us price will continue rising. Okay, so at this point, what are we looking for? A bullish engulfing. We would have taken it all the way from here. Okay, this is a bullish engulfing. You can as well wait for price to break, because this was a small downtrend. You could wait for price to break, come back into the zone before you get a bullish engulfing, or you just catch it from this bullish engulfing because it is a key level. But this was the second touch, so we could not really believe it. This is the third touch. This is where you could actually get it, a bullish engulfing here. Where is your stop loss? Few pips below the last structure. Okay, this is the last structure we had, so we can just shift our stop loss few pips. And what do we expect? 1:2, or you target the most recent swing high, which is here. This was a perfect trade, guys. This was a perfect trade. This gave us 1:4.45. Perfect setup. Okay, where next? We continue. Whenever we see a bullish engulfing, we buy. Wherever we see a bullish engulfing, we buy at a key level. Okay, you see price actually touched this zone 1, 2, 3 times. Okay, we could actually buy from the second touch. So it actually touched the zone 3 times. We could buy from the second touch. So this is the second touch here, and this is a bullish engulfing. So you take a trade, you buy. Where is your stop loss? Few pips below. Okay, what's your target? At least 1:2, or you target next structural high. You are in massive profits, guys. As easy as this. This is what trading is all about. Understanding what you are looking for and know where to get it. Thank you, guys. See you on the next video.